Welcome back, ladies and gentlemen, to the Allincrypto podcast. I am your host, Allincrypto, and today we are both delighted and excited to be bringing you guys an exclusive interview we were lucky enough to conduct with Graham Rodford, who is the CEO and co-founder of Archax, a company that is leveraging blockchains like Hedera Hashgraph, Algorand, and Ripple's XRP to enable the tokenization of real-world assets. This is absolutely a video not to miss, ladies and gentlemen. So without further ado, let's dive over to Graham and get into this interview. Welcome, Graham. The first thing for me to do is ask you how you are doing. It's nice to have a fellow Brit on the channel.
Yeah, thanks very much. Great to be here. I'm doing well, thank you. Yeah, things are pretty busy at the moment. The world's hopefully moving in the right direction, but everything's good.
Yeah, hopefully moving in the right direction. I think hope is the optimal word there. So obviously you're the CEO and co-founder of Archax. That's mission is essentially to tokenize the financial markets as we know it, which is quite a colossal task. A good place really for me to start would be just to ask you to give us a kind of broad overview of what Archax is. I believe they were the first regulated kind of digital asset exchange within the United Kingdom. So if we could just start there, that would be great.
Yeah, no, you're absolutely right. So we set up Archax in 2018. The view was every financial instrument's moving on chain. So we kind of took an interest in crypto, realized that securities made sense on chain as well. Came to the conclusion it's all going to end up there. And we figured if everything moves on chain, it's going to need to be regulated. Institutions will want to work with someone credible, and we should try and, build what that looks like. So it was easy to consider building it offshore and kind of playing regulatory arbitrage, but we're in London anyway. The FCA's got a good reputation, good financial services market, so we decided to just, go for it and get regulated here. I went to the FCA in 2019, kind of explained what we were doing, and in 2020 got our exchange custody brokerage license for securities, and then we also got the UK's first crypto asset registration as well. So best way of thinking about it is like a Venn diagram of securities and crypto. We can do both of those, and where they overlap, digital securities in the middle, that's kind of our focus.
Yeah, brilliant. I think that's a real niche in the market because the cryptocurrency space, or a lot of people in the cryptocurrency space, they seem to be very anti sort of regulation. And I think that comes from where this space originated from, obviously with Satoshi's vision and kind of, F the man and this, that, and the other. But when it comes to the kind of use case of using distributed ledgers to actually tokenize financial instruments, there is a massive overlap there. And it's never going to exist in a world where there isn't a kind of regulatory framework around it, which actually is very needed. I don't know if you have any comments in regards to the importance of regulatory clarity and being compliant with regulations in regards to what you're doing.
Yeah, I mean, well, I've been regulated my whole career. Most people in traditional finance have to some extent anyway. So it's not, it's not really pro-regulation, but certainly not anti-regulation. Most of the regulation that exists to protect people. There are controls and processes around things. So, for example, within our custody, we're mandated to do reconciliations to internal records, to external records. You need to do them daily. You can't be a cent wrong. You can't use client money. There's things like that, which, obviously, if they'd have existed in some of the high profile crypto cases, could potentially have prevented them. So it's not the case that everything's in place is just a friction. Now, the frustration, I think, for a lot of people in crypto is that they kind of just want to develop and build. And a lot of the time, I mean, there's some great innovation that happens, don't get me wrong, but a lot of the times people build things and I look at them and I go, okay, that looks like a kind of regulated market, but being run in an unregulated fashion. And sure enough, at some point, someone loses their money or, something's being done inappropriately or the governance isn't correct. So, yeah, we shouldn't think of it. I mean, it would be good to get rid of some of the frictions, but we shouldn't think of it as all negative. What I'd like to see is the technology replace some of those controls and just, some sort of uniform approach globally would probably be helpful to reduce the amount of time we will have to spend on it. But largely speaking, I think we definitely need it in a space to try and prevent some of the issues that exist.
Yeah, it's really nice to hear. I have a lot of sort of crypto native people on the podcast, and they're very much just about sort of building within their own bubble. But actually, if this industry is set to become what it's on a journey to becoming, it needs to kind of merge with the traditional regulations that are out there. And I think you brought up a great point. If you look at something like what happened with Luna, a lot of that, or that probably solely could have been prevented if regulations were put in place, because there's certain accounting rules, certain things like this that need to be recognized, and they just simply weren't there. And I say this, and I always get I rustle a lot of feathers when I say it. I don't necessarily think Daquan, who was sort of orchestrating the whole thing, was necessarily out to scam people. I think it was just a great example of sort of a failed project, if you will, that unfortunately cost people billions of dollars. Um, we see. So how have you, sort of keeping on the topic of regulations, how have you found sort of working with the FCA, or getting registered by them? Because we see the SEC maybe take a slightly different approach to what we've seen in the United Kingdom. Is that a fair statement to make, or perhaps not?
Yeah, yeah. In the so the FCA have always been fine with us. I wouldn't like, it's the regulator in the UK is the regulator. The relationship with the FCA is an open and honest one from our point of view. And of course, they quiz us hard on things that they don't understand, or things that maybe we could do better. And they have done from the application till now, but they're open-minded and they listen to what we're saying. And if the rules show that we can do something, then as long as we're doing it in a controlled and measured way, they're generally happy with it. So the UK, the regulator, I don't want to say they've been supportive, but they certainly haven't been against our approach from the start. And we've had quite original business models they wouldn't have heard before, and they've coped with us very well. However, there are some mistakes that the government, the FCA, makes putting regulations in place, like the ETF ban for retail in the UK is a perfect example. If you're a normal person in the UK, you can go and buy Bitcoin, Ethereum directly. You can hold it on offshore exchanges. A little bit more difficult now, but you certainly could in the past. You can go and buy it on DEXs, no problem at all. But you can't buy the BlackRock ETF, right? It's complete lunacy. It doesn't make any sense that you can't get exposure for a regulated instrument, but you can go and buy it directly. So rather than people going through their Interactive Investor or Hargreaves Lansdown account, they're instead just going off finding exchanges. So and there's a kind of, there's a lot of issues with banking in the UK for crypto companies. I think that's
Yep.
probably an issue globally, and there's some issues around the money laundering regulations as well, that traditional brokers can't distribute digital versions of the same products unless they're on the crypto asset register, because we think of securities in the UK, digital securities, as crypto assets, whereas in some places like the US, actually they say, well, it doesn't matter if it's a digital security or not, it's still a security. And they've kind of carved crypto and securities out a bit better than we have in the UK. So I mean, the UK regulator, positive, it's all good. We could have done some things a bit better, but the US has had a bad rap, and it felt like it was awful there for a while with all the banks going under. But the BlackRock ETF, I mean, it's the fastest growing ETF ever. More ETFs will follow, and the more adoption that happens around those, the more we'll see the ecosystem growing in the US.
Yeah, teething problems is, I guess, what we can put it down to. I suppose it's like anything, when I first got into the cryptocurrency space from a dental background, believe it or not, it was quite hard to get my head around. A lot of things didn't make sense, but I think as time goes on, it starts to make more sense. And it is shocking that people in the UK can't get their hands on a BlackRock Bitcoin ETF. It doesn't make much sense, does it, really, on the kind of face of it? So how are Archax actually enabling the tokenization of financial assets? So we can talk about your partnership with Aberdeen. We can talk about so many of them, even mentioning BlackRock. I believe it was the ICS money market fund was actually tokenized on Archax, which was a huge announcement for me. It kind of shows the direction that things are going in. But how do you guys actually enable tokenization for people out there that might not be familiar with the process?
Yeah, a lot of your viewers will know this, but for those that don't, tokenization is, I'm not sure the word token was ever a great word, to be honest, and nor tokenization, but what does it really mean? Well, in our eyes, it means just books and records of ownership. So, if you take the books and records of a security, and rather than it being on paper or a database, it's on a blockchain, then we think of that as tokenization. The ownership sits on a blockchain, and that can exist in a few different ways. You can create a natively digital security, which means it's issued in the first instance on a blockchain, or you can have representations issued on a blockchain. So, to give you an example, let's say, well, excuse me, let's use Aberdeen. Let's say Aberdeen came to us and said, Graham, we want to issue a new money market fund on chain. We could create a brand new one whose records of ownership, legal title, were on the blockchain. And if you and I were transferring the token to each other, then legal title would update in their records. More commonly, what people do is kind of equitable interest beneficial ownership, is where Archax will invest into the Aberdeen money market fund, an existing one, and then we will tokenize the beneficial ownerships underneath that. So they're slightly different from a legal point of view, but from a functional point of view, you still end up with a token that you can transfer 24/7, that you can borrow against, that can receive distributions on chain, that can be used as collateral. The functionality of them can be really quite similar. We're kind of, we like the idea that in the future, every instrument ends up with more functionality and more utility. So we're trying to build towards that. So we've started tokenizing instruments. Like you say, we've tokenized the Aberdeen Money Market Fund. We've tokenized the BlackRock Money Market Fund. We have about another 7 high-profile investment managers coming through the pipes that will be tokenizing on some chain at some point soon. Not all money market funds, but a variety of funds. But we've also tokenized Vodafone, AstraZeneca, some UK gilts, some carbon credits. We've kind of, gone through asset classes, albeit in test environment, just to prove these things can exist. And then when we've done that, we've started to consider what functionality do you want to have in place. So, one of the things I've been looking at quite a lot lately is corporate actions. If you're used to paying cash dividend or scrip dividends, which is where you issue more shares, you can do the same thing with tokens. You can issue stable coins as a dividend. You can also issue more of the tokenized asset as a dividend as well. And then looking into collateral transfer as well. If you're a couple of banks and one wants to borrow from the other and transfer some form of collateral, what could be accepted? What could you be able to transfer? So trying to create those rails where anyone can transfer anything 24/7, that's what I think is going to be pretty exciting over the next 6 months.
Yeah, I would agree. And would you agree with what Larry Fink said in 2023 when he said he believes the evolution for markets is the tokenization of them?
Yeah, I'm pretty sure he stole that line from us.
I'm pretty
Yeah,
sure he did also.
yeah, we absolutely agree. I think it's without a doubt going to happen. We started in 2018. We said back then everything was going to be moving on chain, and for those first couple, like the blurred line between crypto and securities made it a bit of a problem. But when you start looking at it, I mean, there's so many things that make sense about it. All of the use cases just now I mentioned: corporate actions, collateral, transferability. But when you start getting digital currency on chain at the same time as the security, that's when the kind of real power unfolds. Because at the minute you've got traditional securities on one form of technology, and then you've got fiat. And to do any transaction, you kind of have to mush these two systems together somehow. But if you've got, like, well, let's just say USDT, USDC, whatever, you've got an existing stablecoin right now, and I've got the Aberdeen Money Market Fund there, you can do a DVP, you can automate that transaction, you can have escrows in the middle, you can distribute to people. I can see the exact ownership of our tokenized money market funds 24/7, and if I wanted to, I could pay dividends or income second by second, and it wouldn't matter who held them. I wouldn't have to go out to people, find out their fiat banking address, ask what they elect for. It can just all be done on chain in a much more efficient way. And the longer we spend in the space, the more certain I am that every single thing's moving on chain.
Yeah, and roughly what kind of a size of market do you think is out there to be tokenized? I mean, because I've had answers in the quadrillions, certainly when you bring derivatives into it, which is the largest market that there is. What kind of size, and I always like to throw these fun questions out there, do you think we're going to see moving on chain? What kind of size in terms of maybe a dollar
I mean,
value?
the
Hard to say.
timelines that, so yeah, if you put your timeline right out, it's definitely quadrillion. Like every asset class in the world's over a quadrillion, but everyone's mostly looking at the traditional markets when they consider that. But the metaverse, for want of a better phrase, is introducing a whole lot of new financial products as well. So whether it be, NFTs, borrowing against NFTs, metaverse mortgages, the future financial market is much bigger. It's a combination of the two universes, if you like. So the number that will end up on chain will dwarf the financials market today, but the period of transition is going to take some time. We're living and breathing this at the moment, where we might have a good idea that, okay, collateral is going to move on chain. That's great, but you've got to go out there and get some of the biggest banks in the world, clearinghouses, CSDs, customers to all move towards using those types of transactions, and that's going to take a long time. But I reckon over the next 1 to 3 years, we should see a good couple of trillion on there at least, and then 5 to 10 years, I think a tokenized issuance will be the norm.
yeah, become almost like a standard, and standards do need to be sort of set. And
Yeah,
that's an industry, or a problem that our industry still faces, is it is still very siloed. And we can move on to that in regards to some of the blockchains you're using to actually do tokenization on in just a second. But I think the point that you raise in regards to it's going to be a kind of slow but then a fast process, we are seeing a lot of people move towards this idea of a kind of on-chain world. Certainly, the likes of Euroclear and what they're doing. We had Augustin from the BIS come out and reimagine the financial system as a finternet. I wonder where he got that from. It very much seems like things are hurtling towards the tokenization of everything. And that's why I was so excited to have you on the show, because obviously Archax is the first regulated kind of service to do that in the United Kingdom, sorry. And it's in a very good position, I believe. I mean, we've spoke with other token issuers, whether that be commercial real estate. We spoke with Ed from Red Swan. It's very interesting what you guys are doing, and I want to talk about some of the distributed ledgers you guys are using to do that. So we know, of course, about Hedera.
yeah,
If we maybe start there was a Ripple announcement in regards to a partnership, and I also believe there was a Algorand announcement. I think it was about 4 hours ago on the Archax Twitter page, which we'll leave a link to in the description, guys. But if we could maybe start off with, some of the blockchains you guys are using to do all of this, that would be great.
yeah, sure. So, like at a high level, we're chain agnostic. So we what does that really mean though? Kind of means a number of things. We want to work with people we like. We want to work on chains that make sense, and we want to work where there's commercial demand. But we are constantly exploring other chains as well. We speak to a lot of people, try and understand what's going on out there. It's quite a hard market to follow. And we also look at a lot of bridges as well. But that's kind of it from a high level. So we've developed a tokenization platform internally. So that's kind of our go-to, if you like. And on that, we've got Ethereum, Polygon, Hedera, Algorand, XRPL, Ripple, and Tezos is being added pretty shortly as well. But we're also looking at Solana and use cases there, and there's a couple of others in the background. So, it's a constant evolution for us. And our starting point with a lot of things, and in fact, some of the client starting point with a lot of things has been to start on the Ethereum side of things, but then often the transaction costs become a concern for people. A few of the other things that exist on that chain become an issue for people. So we start to explore others. So Aberdeen are on the Hedera Blockchain Council, and Aberdeen led our Series A round. So they're a large investor of us. So, their preference was to work with Hedera. We already liked Hedera. We've been looking at them for a long time. When we started Archax, we were originally going to be a fully decentralized exchange, but sorry, we're going to be an on-chain exchange, not fully decentralized. But the reason why we didn't was that the transactions weren't quite fast enough for what we needed, and there's also a cost per transaction. So you were introducing latency and cost, which are two things really our users didn't want. Now we've come a long way since then, but that was kind of our first impression of Hedera. And then since then, we've had the addition of the Blockchain Council, the Hedera Council, which is made up of large institutions, the kind of low fees. So a lot about Hedera makes sense to us. So it's a sensible choice for a lot of institutions that want to be on it as well. To be honest with you, very similar arguments hold true of Algorand as well. The recent announcement with Algorand, the client that came to us wanted us to do a transaction on Algorand, but they wanted to invest using a stable coin, and they wanted to transfer the holding out to their wallet, do a transaction. So we facilitated all of that as well. And then the recent announcement with Ripple, again, really excited about it. We've been chatting to those guys for 4 years. We use Metaco, which was recently bought by Ripple. We've got a bit of a partnership there already. And again, the chain is, fast, low transaction, a bit different to other chains in that it doesn't really have the smart contract usage so much, but has a lot built into the base layer, if you like, but has a lot of the controls and functions that we like around permissionings and transferring transactions as well. So, a lot of the times we're trying to have an arsenal of things that people can use. I don't know where we'll end up overall. I suspect you'll see certain chains being used for certain types of instruments in the future. That would be my instinct. But there's a lot of new chains being introduced all the time, but we're starting to see some be used more and more for transactions.
Yeah, I certainly think Hedera, I've spoke with other sort of companies that are using Hedera, and one thing they loved about it was the kind of fixed fee model. So with something like Ethereum, like you say, it would be kind of impossible in many cases, first of all, from a volume point of view, but also from a price point of view to kind of work with it. Obviously, you've got layer twos. You mentioned the likes of Polygon, which is substantially cheaper. The cost fluctuations may still be a bit of a thing. And then very interesting. So Ripple was a recent partnership. The interesting thing I think about Ripple also is they already have a lot of connections within the kind of traditional world that may bring you guys to a similar point, if that makes sense. Is that something that you considered, or is there any kind of workings with some of their other partners?
Yeah. I mean, with everyone we work with, there is. I think I said it the other day to someone, like the Ripple team are all fantastic to work with anyway. And that means a lot to me that you can kind of collaborate with people, and their business is kind of, and I forget the names of all the parts, but it's kind of split into two in my mind. There's the payments bit and the other bit. And what I see happening in financial markets right now is this question about what you can use for payments coming up a bit more, because ordinarily we would use cash to pay for things. We might send cash via bank accounts, but if we were settling any form of financial transactions, we'd use cash. And what we've seen with the tokenization of money market funds, starting with stable coins, like what is it, 130, 150 billion, something like that. Those guys are earning interest on other people's money, but it's being used for such a lot of transactions. Actually, people are starting to pay attention now. I think more volume went through Tether than Visa the other month. So
Yep.
these things are starting to become important. And then I think some of the people that run money market funds are kind of going, oh, hang on a second. If I put my money market fund on chain, I can be used for transactions, much like stable coins, but actually let the user keep some of their yield. And I get quite interested around that point. This idea that why would you have cash? Why would you take bank risk and have something which is usually lower yielding and not even paying you base rate for, like, a standard bank account? If I could be holding a money market fund and whoever would accept it as some form of payment. Now there's a lot of regulation that exists around whether this is possible or not. There's a lot of friction doing AML KYC on everyone that holds a security, but this idea that it can be used for payment. So one of the attractions of Ripple is, they've kind of majored on payments for a long time. So just seeing if there's a way that we can integrate payments on XRPO into their payment network is pretty interesting for me.
Yeah, I think I also really like Ripple's stablecoin announcement. I think stablecoins are one of the biggest use cases that we're going to see come out of the cryptocurrency space. You touched on it there a little bit. But when you look at, you mentioned a company like Tether, actually Tether's revenue rivaled some of the largest banks in the United States.
Yeah, and they've only got what, 60, 70 people, something like that, I think. So I mean, like, regardless of what anyone thinks about it, in the whole history of mankind, it has to be one of the most efficient businesses that's ever been built.
Unbelievable. And it gets a lot of sort of, it constantly gets brought up. And I think even Brad Garlinghouse himself brought it up as a potential black swan. I don't think, it's not my opinion that that's going to be the case. But what is interesting to me, certainly when we mention the likes of Ripple, is the fact that Tether is a non-US company. And we see the US really leverage its power across the world with the companies that it has under its jurisdiction.
I guess there's a for all of these things, probably worthwhile taking a step back and considering the ways that it can change the way things operate. Like, all of us kind of get caught up trying to rebuild things that we're already familiar with, and that can be a real problem when you're trying to innovate. So because I've spent ages in financial services, I'm used to things, working a certain way, and then every now and then there'll be someone in crypto with no financial services background who'll just say to me, why'd you do it like that? Why didn't you do it this way? And you're kind of like, oh yeah, why don't we? And that can be a real eye opener. So for things even that are already existing in the world, whether it be debt, whether it be national currencies, I think we can re-question the way that they operate. One of the things I don't like at the moment, even though it probably is justified to some extent, is the stablecoin research. Sorry, the stablecoin consultation papers that I've seen, or the CBDCs or tokenized deposits. They tend to stop interest being payable on them, and I think the reason that exists is because they're trying to protect the banks in each of the jurisdictions. Because if you had an interest-bearing stablecoin, then you might not use the banks so much. And I just kind of question why. Like, if there's a more efficient there's a more efficient way of operating. Why would you not have interest being paid on stable coins or on tokenized deposits that are being issued by banks? It doesn't make any sense to me. So yeah, I'm not sure I've answered your question there at all, but just rethinking everything, why they exist. Is there a better way of doing it? As an example of that, on our market, Bitcoin trading against dollar, or anything trading against dollars or pounds or whatever it is kind of standard in the market, then crypto comes along and suddenly you've got everything trades against everything, right? Bitcoin, ETH pairs. It's like, that's pretty interesting for a start. It's rare that you'd get Apple trading against Tesla or whatever, though you
Yep.
see similar things in the FX world, obviously. And one of the things we're looking at right now is, why not have Bitcoin against money market funds? That kind of is an interesting way of looking at things. Why do I have to be in cash? Why not all the time I'm waiting for my trade to fill? Can't I be earning a yield in my money market fund? And then at the point of execution, I flip straight into Bitcoin and the other side immediately gets a yield bearing instrument. So they're the sorts of things that I think can really change the way that you think about how markets operate.
Wow, that's fascinating because the world of possibilities really does open up when you think about markets against markets, right? So I think one of the biggest problem that investors have is where do they hold their collateral? And actually, the kind of worlds of or the realms, certainly from a retail point of view, the kind of realms are opening up in regards to where you can actually hold things. Now you've got the option for money market funds. Do you think, and is this something that Archax might be trying to do? You'd mentioned maybe Bitcoin against money market funds. Just quickly, is that something you're thinking about doing?
Yeah, yes, we are. In fact, we announced that we are doing it, and we could launch it today. It's just quite difficult for a few reasons. So firstly by introducing the Aberdeen Money Market Fund, for example, into a crypto trading pair would make it a regulated market. So that would mean that it's only open to people that come to our venue that are able to trade securities. Not everyone that can trade crypto can trade securities. That's the first problem. The second problem is that you often need to register a security into a central securities depository, so like Euroclear or DTCC. Now, there's some ways around that, but that would mean we need to work with Aberdeen to get their security issued into a CSD, which can be a bit of a pain. And the third problem is liquidity as well. In crypto, part of the reason that you have deep liquid markets, if you ignore any accusations of wash trading, part of the reason that they're so liquid is because you get one of the big market makers and they can easily hedge between multiple venues. There's so many places you can hedge your risk. If I have the Aberdeen Money Market Fund on my venue, like there's nowhere to hedge that. Now, in that case, the price is completely predictable, so you'd probably find a market maker to work with you. But because it's a regulated instrument, you'd almost always need a regulated market maker as well. So all of this talk about getting automated market makers is great for crypto. When you start introducing securities, it all starts to become a little bit more complicated. So in order to solve that, we start looking at other things like, okay, how can we take the Aberdeen Money Market Fund and turn it into something which is an unregulated instrument, which then in turn trades against Bitcoin? And we've got a few ideas of how to do that. We're just not sure the best way to execute it yet.
Yeah, exciting things for the future. And you'd mentioned that you work with or are tokenizing on a number of different blockchains out there. What's your solution for interoperability? Is it a very kind of standard thing in the sense that, if somebody wants to maybe move their Aberdeen money market fund from one blockchain to another, it's just a case of settling up on one and reopening on another? Is there any kind of protocol that you guys have for interoperability between these blockchains?
We chat to guys like Chainlink and Axelar, like all those guys and what they're doing. We're just trying to work out the best solution for us. Everything on our platform, like Aberdeen, BlackRock, and the other investment management managers that are coming soon, they're all available on all the chains we support. And then in our system, we've got something which I mean, it's quite boring, but I call it the consolidated cap table. Kind of adds up the cap tables across all of the chains to give one consolidated cap table. Now, when you're moving them between them at the moment, we would just do a burn and mint, or you just submit them to us and get them reissued. But we want to work in a more structured way. We're a little hesitant to work with too many third-party apps protocols because we embed within our tokens a lot of whitelists and a lot of controls because they're securities. We did consider building a bridge ourselves. We might still do that, but it'll be a simple bridge. We're not looking to go and compete with the guys I mentioned earlier. We're just looking for an ability to flip from one token to the other.
Yeah, I think it's still a problem that the space generally sort of faces. If you could maybe point out, a couple of use cases for Archax that you think are going to be the biggest use cases. We might have already mentioned them, so it could be the money market funds. I'm not quite sure in the United Kingdom, but I know in the US it's like $6.6 trillion in money market funds. I think it's the highest it's ever been, right? And that's obviously because of or a big variable would be because of the interest rates right now. So are there any kind of use cases for Archax that you think really stand out for you in regards to specific assets being tokenized?
I'm not sure about an asset types. I mean, everyone talks about fixed income, and the banks actually do a lot of fixed income issuances, but on the kind of, you know, on the lower tiers, let's say, we don't, that's not what we're seeing. We're seeing a lot of fund tokenization, a lot of SME equity tokenization, those big fixed income bond issuances. They're probably reserved for the kind of tier one banks that have been used to running those programs anyway. We're not really seeing that. I think the collateral network's a big thing. I think you're going to be hearing more and more about the word collateral this year. And again, back to crypto, the people like Arve and, you go out there, you take your asset, you borrow against it, or you lend. And that whole financial market that developed there is super interesting when you start thinking about how do we replicate that with securities? How can I make it so that you can turn up to my app with any security that you have, and I have someone willing to lend you money against it? Like that's a pretty fascinating place to be, and the ability to transfer them around 24/7 can really change the face of finance. Transferring any asset that's acceptable to any counterparty to be used as collateral is yeah, I think that's gonna. I'm not quite sure we've got enough time left in this year. I keep saying it will be this year, but maybe over the next 12 months, that's going to be pretty exciting.
Well, fascinating, and this is something that Archax is kind of going after, if you will.
Yeah, yeah. I know we are building one right now. Um, I won't tell you the name just yet because I want to do an announcement around it.
Yep.
But
No, that's
it's,
fine.
it's in line with our dinosaur bird theme. So hopefully, this idea of bringing everyone together and having them all be able to work in the same place. Look, it's just the same as like Signet that used to be around
Yep.
by Signature, and then I think you've got, is it Blink or Pulse with BCB and Bank Frick? All of these guys have these internal networks that at the moment you can transfer crypto around 24/7. So think of a similar thing, but using Archax's digital securities. That's what we're trying to build.
Wow, that is huge. I mean, when you think about how I'm sure many people are familiar with Aave or Compound or whatever it is, when you think about the fact that you could have your kind of digital representation of whatever it is you've got and you could essentially get loan against it, there's markets that open up around that. I think that it kind of creates a whole nother level of finance, really, doesn't it?
Yeah, yeah. It's kind of my point earlier. Is a lot of what's happening. People think they're creating something new. Uh, Probably existed in the regulated space already, and you just need to kind of try and bring the opportunity together with what needs to be improved in traditional finance. I mean, the opportunities here are huge for everything, like NFTs for land registry. I really love that use case as well. The ability to sell your house in seconds rather than, it takes 6 months or whatever for the land registry to update. Owning art, fractionalizing art, borrowing art. I like the idea that museums can take their artifacts and sell the rights to them, but keep possession so that they can raise some money to buy new artifacts. Every single security on chain, all the financial markets, the collateral, paying the dividends. There's quite a lot to tackle. So I'm trying not to do it all at once, but it was all kind of exciting.
Yeah, quite a mammoth task. And that brings me on to my last question. And that is, I would like from you a 10-year sort of, where do you see Archax in 10 years' time? What kind of a world do you think Archax is in and what role is it playing?
Yeah, I'm hoping we're not going to be there again. Look, it's coming
Yeah.
any minute now. I think this last the more progress is being made every year now. So the first like 3, 4 years we were around, it was slow. The last 2 years have been pretty phenomenal. Yeah, probably. I'm back to my point earlier. I mean, 10 years you're looking at trillions for sure. Maybe you hit double-digit trillions. I hope you do. But I think the point is the standard issuance model will be to create digital versions of security. I mean, they'll just be called securities, right? We won't be calling them digital securities anymore. We're actually building out a Luxembourg, a digital CSD, Central Securities Depository. which means that natively digital securities will definitely be able to exist, hopefully by the end of this year.
Wow.
So we're going out there competing directly with Euroclear and DTCC, but in terms of digital issuances, and those guys, DTCC and Euroclear, they're all working on their own digital projects.
Yep.
And in the next 10 years, if either one of those says our main books and records are now on chain, that means overnight you're going to be putting trillions of assets on chain. So yeah, 10 years, it's going to be trillions for sure.
Yeah, DTCC, I think that in terms of volume, they're in the quadrillions, right?
Oh, yeah, they're huge. Yeah, I'm not sure it's a quadrillion, but it's definitely up. Well, it's probably the biggest CSD in the world. And Nadine there, who's running their blockchain innovation, she's ex-currency, ex-State Street, so she's fully familiar with the needs of banks and what tokenization really means. So I'm pretty sure those guys will be moving in that direction as well.
It's very interesting how we're seeing all of the kind of, or many big sort of players in the traditional financial world, State Street players, people like this actually moving towards the blockchain space. I think it's very reassuring, certainly if you're betting on this technology making an impact, just like what Archax are doing. Graham, it's been an absolute pleasure. Thank you very much for coming on the show to talk to us about Archax, what you're doing and how you're doing it. And I really hope we can do this again sometime. Thank you very
Yeah,
much for your
great to
time.
be here. Thank you very much. Great. Thanks.